One of the big issues, obviously, is the Fed. The Fed will have its decision next week. What do you expect? Do you have expectations from the Fed? They cut the 50 basis points last week. They did an infusion of some liquidity this week. What's left?
So the way we talked about it earlier is the rate cut. Some felt it was necessary. Some felt it wasn't. But the bazooka, if we can call it, in the liquidity in the short end of the market, I think was effective, will continue to be effective. So let's see how that I think they're going to look back and see how that's impacted liquidity before they make the next decision. We're also just going to have more information, David, day to day to day on coronavirus. Yeah. And I think that's, we have to keep perspective. The real issue here is around coronavirus and the health issues. And as we talked earlier about the outsized impact it's having on low income and low income sector, but also small businesses.
We may have some indication, although we may not, of where we're heading on the fiscal side when you're talking about the low income people, because a lot of people are saying that's where we have to be targeting. Because you think about hourly employees who have to stay home and things like that, they're going to be hit pretty hard, pretty fast.
Yeah, it's been a very, very big change with schools closing across the board. The impact on families is significant.
At the same time, one of the questions is, what's the pattern with China? Because we're looking at China to some extent to say maybe we'll follow that. When does it peak? It seems to be coming down now a little bit already. And we get some China data coming out, things like retail sales.
What data are we getting from China?
That's always the question, and actually, it's a good point that if it's too good, then you don't believe it.
Yeah, exactly.
Right? Exactly.
But will the data next week cover the period of coronavirus in China?
It's the month of February, so certainly
it
was hitting China by February, so we may get some indication, some hint about that. And also we get some sentiment sort of data out of the United States, because that's clearly key about exactly what's happening in consumer sentiment, sentiment overall in the United States, of how much is it really chilling, U.S. businesses and consumers in particular, because we've been so dependent upon the strength of the consumer for this economy.
So, interesting week.
Yeah, no, it will be an interesting week without.
Every day is interesting right now.
Yeah, exactly right. But I come back to what you were talking about. I mean, one of the things I will be looking at is how many tests are we doing?
Yeah.
Are we ramping up the tests? Do we have a better sense? Because I think most people have a sense right now, more people have it than we know about.
Yes.
And it's exacerbated by the fact that people can be relatively asymptomatic for an extended period of time. So people could walk around with it, we don't know. And the more we can get our arms around just how bad is this problem.
Well, I think what you're saying is the more people feel that we actually have accurate numbers, accurate information, accurate testing, plenty of testing, they're going to feel more comfortable that we actually know how this is playing out. And I think that is getting better each day as well.
We also have Bank of Japan decisions coming out next week. Is Bank of Japan helpful at this point? I mean, they've been in a tough spot for some years now, frankly.
Well, in terms of monetary policy, again, I think monetary policy is not what is necessary in Japan. It comes back to the same story we've talked about all day, which is fiscal stimulus. I don't expect that we're going to get that next week, but I think that's what people would be looking for.
I talked to Larry Summers, the former Treasury Secretary, this week, and he said he thinks we are already in the same spot as Japan. People talk about the possible Japanification of Europe and the United States, that sort of low growth, low rates, negative rates existence that, as he says, is awfully hard to get out of. Do you think that's too soon to make that call? Are we stuck in that sort of quandary?
I would say it differently. I think Japan is far more severe in those measures than the U.S. But we've talked about this over the years. There is a point at which we have to get back to more normalized interest rates. Yeah. There is a point at which we need to get back to a more normalized curve. One of the things that we have to realize is, as we sit here today, a lot of the monetary stimulus that could have been used now has been used. We have almost zero interest rates. But more than that, if you go back to the end of 2017, the announcement of personal income tax cuts, corporate income tax cuts, and a significant spending bill, we used a lot of the fiscal stimulus then as well, which is implemented in early 2018. And as we sit here today, one of my worries is that we have less ammunition on the fiscal side than we would have had we not spent that earlier. One of the implications of that, David, is that the deficit prior to that was narrowing since the crisis. But since that stimulus, the deficit has been widening. And the estimates for 2020 are that our deficit will be $1 trillion. So we do have to keep in perspective that we don't have as much ammunition on the fiscal side as we could have had.